Monday, August 23rd, it's 1:45 p.m. at the time of this recording, and on Friday the Dow Jones finished up 1%, S&P almost 0.5%, NASDAQ 0.5%, NASDAQ 100 0.33%, and the Russell 2000 finished up almost 1%. Let's get into what happened on Friday. So on Friday, basically we had the OPEX unwind that we talked about in our last video, and I'd encourage you, if you're a new subscriber or just turning to the channel, please try to watch my last videos. Everything does tie together, and watching one video, it's never going to make sense. Here, looking at the NASDAQ 100, rather the NASDAQ, NASDAQ 100, we have reporting control right here at 29,623. And the way I like to view this level right here is basically, to simplify it, above it, bullish, below it, bearish, and why to me is point of control is literal, to the actual name itself, right? Think about this as bulls and bears, or think about this as like both of us have equal ownership in a company, right? If me and you both have shares, let's say I'm bullish, right, and you're bearish, well, right, once we start to break our point of control, who's in control? That's the way I view the point of control. Our call wall right here is clear right here at 29,446. Our put wall is right here at 29,214, where we bottomed out here. What this pattern can turn into is just undercutting here and creating our lowercase h's. And what our lowercase h's look like is right here, right? So you have your control bar here, right? This is controlling price. You can't break above that. And again, on each of your control bars here, how I like to draw my fibs is like a point of control here. So this is a previous point of control that we broke, and right down here is a previous point of control that we broke here within our control bar here. Sometimes people think too much. You have a wick up here, you have a wick down here. The way I kind of view this entire bar right here is we can't push above it. Who's in control of this bar? No different from the overall picture here on a daily time frame. Who's in control of this bar right here? Okay, going over here, there's a shorter time frame here, or a larger time frame. We have the weekly picture here, and we have our evening star reversal here. And another good rule of thumb here when you're trading is, until you break out of this evening star here, right, there's no reason to go long, right? Someone might say, well, what should we do? I think sometimes the best thing that traders can do is just sit on their hands, right? Sitting on cash isn't a bad idea here. And I think sometimes too, people are saying up or down. But if you just mark out your levels here, right, this is how I mark out my fibs. Swing high to swing low. You can draw them a bunch of different ways here. You can see where your levels are here, right? And this is on a weekly time frame. If I drop them down to a shorter time frame here, say like a 30-minute time frame, you can get clearer pictures here, and you can see your control bars here as well. So just cleaning up the chart here in real time, we'll chart this together, right? Let's look for our swing low to swing high. So this was on July 29th, and we peak out at 30,337. We're going to go to drop a Fibonacci here. Okay. And then where did we most recently top out at, and to where we bottomed out at right here. Okay. So now we have some pretty clear, hopefully, laser levels. We'll go ahead and just remove this additional fib here. It doesn't auto-detect everything here. And we can see our zones here. And I think one important tool to use when you're seeing these levels here is, and you can also see kind of the greer and feed here. Greer and feed, I meant greed and fear, excuse me. So one of the things that we can do here is just looking at the chart visually is we can get our point of control, we can get our anchored volume profile here as well. You can kind of identify, and also you kind of see the correlation between your Fibonacci's and also kind of your value area highs and your points of control here as well. One thing that I'm looking for, right, is when I'm getting involved in a zone here, go ahead and use your price tool range here on TradingView right here. Drop all the way down here, price range tool. And on these levels here, just see what your expected moves are. How does price react here? How did traders react? Basically, how does the market react at certain fib levels here, right? So sometimes, right, you have a really good move here. So let's say we're going to start right here, and we can go all the way up to 2% here. Okay, but then there's some levels here where it's like, we're trying to find one here, 0.8% here. Not really good charts to use right now, and the reason why is you're getting really large moves here in the market, so you're having really large expected ranges. But if you go here to like a smaller ticker here, the levels are going to be a little bit more reasonable here. Okay, so a good rule of thumb, right, is mark your swing highs, mark your swing lows, and you can see what price does at these levels here. The number one mistake that traders make is, right, they're going to get involved right here when the move already happened, right? You had your levels right here. This is a true 50-50 zone here. These are literally laser levels. You can see how price reacts in this range, right? But traders will get involved right here, say on a 0.77% move up here. They'll get involved like maybe, they'll get involved like maybe right around here. So how much does that leave you, one, to trade with? And sometimes, right, with these other concepts and how I think these other concepts fell, like ICT and other different strategies that people uses, right, they can't tell you, right, they don't give you your levels. They look for wicks, they look for, you know, kind of different MSS setups or I kind of in breaker blocks and mitigation tools, this and that. But the truth of the matter is, in my opinion, all you have to do is draw your levels here. Look at structure, look at the chart here, right? Because they might get wicked out here, thinking, right, that price is going to reverse. But if you drew your levels out here, right, you can get your full expected move here, right? So why take like 5 or 10 ticks when you can take what? 30,339 all the way down here to 29,000, 1,000 ticks, right? And that's how a lot of successful traders trade. They have their levels marked out prematurely, and they're reacting and waiting for price to do its thing. But you can have all these levels marked out here, right? But if you're not patient, then what's going to happen? You're going to have a very difficult time doing what? Trading, okay? Going over to the ES here, let's just go ahead and drop an anchored volume profile in here. And we can get our levels here. Point of control here from a daily perspective is at 7,551 here. It does look like we try to come up above this look here, same charts almost, control bar here, but you wick right back down below. So one thing that I want to be paying attention to, right, is are we going to create a lowercase h here? Where's our 50% line here? It's at about 7,707, and we're going to be closed out on Friday, 7,688 here. So another good rule of thumb here, right, is what? I'm not going to go long until we get above this point of control here from this perspective. Okay, here's your 50% line, just go ahead and mark it. And one thing I want to pay attention to, no different from how this chart and this chart differs, is, right, different time frame, right? One time frame is never enough. Same chart pattern here, you have your evening star here. Again, in order for us to consider this bullish, let's go ahead and just mark this bar here real quick. Let's see here, okay. And that's 7,738 here. The hard part is, right, once you get back to this point of control or this 50% line here, you'll notice what? So if you go back over here to the NASDAQ, right, sometimes you get back to your levels here, right? And then since someone might, you know, take from this video, which is not what I'm trying to get you to do, right, and nothing that I say here is financial advice, education purposes only, you'll notice, right, oh, we come back up to this level, oh, let me go long here, but right, then you just reject here. So it's not enough, excuse me, to have your levels marked out. You need to be combining the macro, the fundamental, the technical. If you go back to the beginning of the video, right, what are you seeing right here? Some things are flat here, but some things are rising larger. Why is that? What specific, right, indices are pushing us up here on different markets? Why is stuff rotating here into the Dow Jones? I thought technology was bullish here. That's what probably a lot of people are saying right now. Going over here to the NDFI, this measures the amount of stocks here, the 100 stocks here in the NASDAQ 100 that are above their 50-day moving average here. So we see this sloping down here, right? So we're seeing what? And this isn't a magic 8 ball, no different from the indicators that we use here on the Discord. Each one serves a purpose. We're not trending up, right? We're trending down. So sometimes, right, these tend to mark tops and bottoms, but right, it's not a magic 8 ball. But it is very helpful to see, like, what are we doing here, right? Are we going up or are we trending down here, right? We had our bottom here, right? We did really good in the Discord, taking swings, longs, and, you know, day trading here, 0 days. That's what we do here in the Discord as well. Looks like you have a bull flag here. Broke out from that. And now we're trending downwards, right? So again, right, combining this with other charts, combining the macro and economic factors here, we're able to do what? Make a really good decision to say, hey, right, are we getting a bid here in technology? No, it looks like we hit, like, right, what, a 10-day ceiling, okay? Where might we retest next to on Micron? All the way back down here to the 55 daily moving average. And the way I kind of view the 55 daily moving average here is this, to me, is institutional buyers, right? This is what net sellers look like when you break that 55, and net buyers is when you are breaking above your 55 daily moving average here. So looking at Micron here, right, this looks like a stock that's doing what? It's barcoding. And if you go ahead and just use your handy dandy, I'm going to use the date and price range here. Where have you gone here in the past? What? Let's check here. Past 73 days here, right, we've gone up what? Looks like 100 points. Someone might say that's a lot, right? But if you're doing 0-day trading and these contracts are very expensive, you're going to be having a very, very tough time here, okay? Going here to the IGV sector, looks like software is continuing to catch a bed here. And I think one of the problems here we're having in the market is we're being told one thing, but something else is happening here, right? So what's actually happening underneath the hood? We thought, what? That AI was going to take over software, but that just doesn't seem to be the case right now. What's happening here? Software is catching a bid. Why? Partially due to Microsoft earnings. If you didn't catch my last video, we went over Microsoft earnings, and right, they had a 0 growth, and they were doing what? raising capex, and also doing what? Before they had forward guidance, right, was what? Bullish. Okay. Here as well, just switch into a different chart in case anybody doesn't understand, how to view NQ, which is the Nasdaq 100. Going over here to QQQ, and so kind of simplify, what I'm looking at here from a weekly perspective. The daily perspective to me kind of gives me about 7 days out. The weekly 14 to kind of 21 days out here. For me, it's pretty simple here. Again, no different from NQ over here. I'm not looking to go long on a stock like this, and maybe not at all until the end of the week to see kind of what happens. I don't really feel like gambling, right? And what I mean by that is, everything we do is educated guess. When people think about the stock market, they say, oh, it's risky, but like, guys, life is a risk. Getting married is a risk. Going to work is a risk. Going to sleep is a risk. Eating food is a risk. Having kids is a risk. So that's how I view the market. Everything is risky, right? And some things are more risky than others. So if we have NVIDIA earnings coming up here, we have Jackson Hole here. It would seem right that we might chop right until we get a decision here, or maybe some good guidance here from NVIDIA and maybe Mr. Warsh himself here. So sometimes when you see chop, what does chop look like? This again, drop it down to maybe like a 15-minute time frame here. Chop to me kind of looks like this, right? You're really going nowhere here. So again, basically, since we're going to use our handy dandy date and price range tool here, where have you gone essentially for the past 17 days here? You've gone up basically 1.59%. So basically, if you're holding a call down here, if you didn't take profits up here, right, you'd be hurting, right? I don't know if these calls are being profit. Somebody have to fact check me on that in the comment section here. But not getting too off topic here, right? There's no point to kind of me rushing to a market here, right? Actually, let me go back to that chart here real quick. You can barcode for quite some time here. So obviously we're barcoding for 17 days here. But if you look at this barcode here as well, from over here to over here, how long did you barcode for, right? 4 days, and actually you kind of dip down here. So I don't want to get stuck in a chop range like this, and I think that's why it's very important for traders to understand what's happening here. Again, from Thursday right to Friday, how far did you go up here? 0.63%. There's barely any money to be made here. And again, I'm just looking at the Nasdaq here. When you pull up your ticker list here, obviously there's different indices that move here. But again, right, why am I wanting to go risk on here when everything to me is kind of screaming risk off? Earnings are so great here, but then you had NVIDIA over here that just got kaboshed. I mean, holy smokes. Woo! I mean, look at this. I mean, guys, does this look bullish here? So again, actually these levels were marked here on my chart. If you guys are interested in subscribing, you can get my free watch list here in the Discord. Just comment watch list here and I'll provide it to you for free. Just make sure to join the Discord. All these levels are marked out here. I try to simplify the charts without all these crazy lines that I like to do, right? I think less is more. That doesn't mean it's right. That doesn't mean it's wrong sometimes. What it means is, right, simplifying things in front of you help you make easier educated decisions here. Looking at this simple chart right here, could have said, okay, we have resistance here. What's a good risk reward here, right? If you're going short here at 280, maybe your stop loss is 298, right? What's your risk reward? Using this tool, handy dandy tool right here, right? What are you risking up here? Okay. Versus, where's your next level to the downside? You have to mark your levels here. We can do that in a different video. If you guys are interested, make sure to watch my fit videos. That is how I mark my videos here in real time, so that way you guys can understand here. But again, going all the way back over here, the QQQ, I just want to give you an example here of what those charts can really look like. So let's go back to QQQ. There you are, pretty girl. Okay, here we go. So, again, the market's telling you, they're trying to price in something, but they can't quite. You do have an inverse head and shoulders here. You're starting to get these bizarre looking patterns here. I'll call them arm extensions. I mean, someone might say it's a cup and handle. I mean, someone might say it's a bull flag. It's very unnatural looking is what I can tell you. I've been getting more and more of these patterns here lately. So when I start to see stuff like this, I see extreme manipulation in my opinion, but also it's just something that I want to get involved in. I want to see a nice, clean looking chart. I know in this market it's very hard to see, but these are the things I look close to and for to say, you know what, I think it can wait till what? We get a key level here that we might break. And for me, one of those key levels here is 721, right? That's half of that bar on what? The weekly time frame. So if you can't get above half that bar, right, using the concept of, right, bullish and bearish, point of control, all those different analogies and terms I use, right, there's no point to me doing what? Going long, because what? From a longer term perspective here, let's mark it red, right, we're bearish, okay? You also have an evening star here on the weekly time frame as well. Going over here to SPY, going to chart this with you guys in real time here real quick. Look, I don't even have to chart it. It's the same exact thing here, but to get your levels, swing high, swing low here, and again, there's multiple ways to draw it here. But again, just from the most recent price action here, I'm gonna mark this level here, okay, and then what is this bar showing me here on the daily, weekly time frame? How much of this bar do you have to get back above in order to be considered quote unquote bullish? 769 here. So until I break 769, right, I'm going to be looking at my other levels here again. Maybe there's a catalyst, maybe that's NVIDIA, maybe that's Warsh, the Fed, etc. Right? But again, for me, I'm not really wanting to get involved here until we kind of break key levels. To me, I don't want to get involved and chop and lose my money here. When basically, right, you just wait for the decision to be made and then you can actually participate and play. Because sometimes people feel like, oh my gosh, I'm going to miss the move here. But guys, this is one indice. What is the S&P comprised of, right? 500 others. What is the NASDAQ 100 comprised of? 100 others. You don't have just to play SPY. But a lot of people choose to play SPY every day. And the way I like to go into the market is index sector stock, right? So what indice we're talking about, right? We have a rotation to Russell 2000. What stocks in the Russell 2000 are moving up here, right? What sector? Are we talking about consumer discretionary, defensive? Are we talking about technology? And then obviously the individual stocks, which is where I tell people you have to be careful. You're going to have winners and losers. Some stocks in the same sector are going to be going down where others are going up. And then I go macro, the what, the why, the fundamental, the use case, and then the technical is the chart that we're talking about here. So that is how I tie everything in together, guys, okay? I hope that helps. Moving on next, you've been having here too, if you just pull up the stocks, and again, guys, like this is the same exact chart. Let's go to the weekly time frame. This is essentially the same chart across all these sectors on the weekly time frame here. You're seeing a massive rejection here. In fact, you actually saw the same rejection here back when IGV caught a bid here. So a few months ago, it was around, I think it was this candle. We had a candle that looked exactly like this right here. We had a candle pivot here, bearish engulfing. You had your kind of middle doji. Doesn't look like a doji, but I'm just going to consider a doji. Then you had your reversal candle right here as well. You undercut, right? You had a retest and you broke out here. This looks like the same exact thing here. So if we just look at this chart right here, and you try to pretend that these are the same sectors, obviously they're not, right? Yeah, and again, someone might say, hey, are we talking green, red, green? I don't care about colors. I care about the candles themselves and also what's happening here. Kind of around this time, right, supposedly AI was going to take over software and the world was coming to an end. Well, it turned out that was indeed a lie, right? In fact, you are not the father. It kind of felt like that kind of moment here. So we kind of have the same candle here, chart pattern here as well. So you have your rejection candle here. You had a 3 black crows. Someone can argue it's something different here. Just stay with me here, guys. So right, red candle here, bearish engulfing. Then you have kind of your middle doji here. Then you have a candle right here that can possibly all the way undercut here on all these indexes. You're gonna have a retest and break up here. And that's why this NVIDIA earnings to me is super, super, super important, and why I think a lot of people are not understanding what's happening here. But again, in order to understand what's happening over here, you also have to understand the past and how other software, other sectors like software reacted. So going back over here to a Micron, we're basically at a do or die point here, right? Software is, semis and memory, this entire AI trade is kind of taken a halt. And that's fine, it's healthy, right? But I think kind of one of my thought processes is I get like the technicals, I get all these different things, and I'm not fighting against the market. These are just my own thoughts, and again, nothing, kind of in this video should be taken as financial advice. I'm just trying to candidly wonder, I mean, if we're so bullish here, where's the bid? And if you remember here, even going back all the way over here to gold, we talked about this in one of my other videos, right? You had no bid, right? So what does no bid look like? You're just chopping. What does chop look like? It looks like this. Kind of like how we had on OPEX Friday, which is important to make sure to watch my videos. Everything does tie together. Maybe you watch my video, you may have not gotten chopped on Friday if that was you. So if you look over here, right, you're barcoding for 42 days here. Really nothing's happening here. So if you go back over here to Western Digital, let's just take the low over here. And where are we at? You've been barcoding for basically 35 days. So roughly the same amount of time you've been barcoding for gold. One didn't catch a bid, right? And one did catch a bid. So what you're seeing here, right, is obviously rotation. Someone might say it's defensive, someone might say it's this, someone might say it's that. That's going to be in a different video for a different time here with some of my tenfold thoughts. But I think just in a nutshell, what I'm seeing here, kind of what I'm trying to get at is this is a big, big earning. So we're going to go over this, right? So what this Wall Street expects here from NVIDIA is $92 billion of revenue. I'm going to go ahead and show you my levels here and why they matter. They're adjusted EPS, 2.09. Data center, 83 billion here, stock 206 roughly, market cap 5 trillion roughly. I gotta fact check that because I don't think that's true. I could be wrong. I don't think that's true. Anyways, so basically my tinfoil hat read, right, is the whole complex runs on promises. We've seen that with Micron, we've seen that with NVIDIA, we've seen that with most notably recently SMCI. You have ARM stock, basically almost every single stock that has been accelerating in growth. Do you notice how there's always this weird article that just conveniently comes out when things don't catch a bid? Like Samsung a few weeks ago saying, oh my gosh, we have a backlog into 2028. I'm like, why does the backlog matter though? If you can't produce the things that the data centers and maybe all these other customers need, who cares about the backlog? If you're just going to say you're going to basically gouge all these other customers, that's not a good business model, right? Because what happens when people eventually have what they need? I think one of the long-term things that people are forgetting from like a macro perspective is like, what's going to happen actually long-term? So once these data centers get built, right, and someone might say, oh, the fundamentals don't care, the macro doesn't care. It does matter though, right? What happens, let's say, maybe a few months from now, all these data centers are going to be quote unquote complete. And I think the biggest problem that people are missing here is how do you end up with so many different sectors? How do you end up with so many different stocks that, you look at the chart here, and I'm just going to show you an example for like PayPal. How do you end up with so many different stocks that look like PayPal, right? Once upon a time, PayPal was up here. What happened, right? So the way you kind of see this trade here, and it's not just PayPal. What does it also look like? Oracle. What does it also look like? Microsoft, right? And you can say, well, Microsoft is coming back up here, but it's the same thing, guys. What about Adobe, right? What about CRM, And so I'm not going to show you the charts, guys. What about APP? I thought this was so bullish. Guys, this is at 748. That's crazy. Now where's it at, right? 305. So, what happens when these data centers eventually just, right, get built out? I think that's the thing that people are kind of missing here. So what I see here, right, is I do understand that you guys are saying you're going to complete the data centers. Do I believe them? No, candidly, I don't. I don't even know if half these data centers are going to get built here. People are leasing these data centers before they even built. Imagine, right, you sign up for my Discord, and you sign up for trading signals. None of it's financial advice, obviously education purposes only. And all of a sudden I say, hey, I got you in 3 weeks, bro. Right? You'd be like, wait, what the heck am I paying here? So if we have such a massive backlog, I think one of my concerns here is, what if they just kind of go somewhere else? Who? I don't know, but my point is like, what if they take a different turn, direction for the company? What if they realize they don't need data centers? What if they find a different solution around data centers? Okay? So, and then, going a step further with this, right? The thesis here is, what happens when you build your data centers? What happens when they're actually complete here, right? Your mission's done here, right? But then that's where the circle of lies has to continue. Oh, we're going to do this. Oh, we're going to do that, right? What if data centers leads to what? And I think that's the next question here. That's where you start to get into photonics and people start talking about robotics and all these other things. Candidly, I think we're a decade away. And one of the reasons I think that is you have so many different companies seeing all these things that have never happened. People keep forgetting that Tesla was talking about semi-trucks and Cybertrucks, and how many years did it take just to make a damn Cybertruck to release it? I don't know, I feel like 6 to 7 years, maybe call it a decade, I could be wrong, I don't know. I'd have to fact check that, somebody maybe fact check that in the comments for me. So, right, we're going to have all these grandiose ideas, but what's actually happening now and what's actually foreseeable in the future, right? It's cool that SMCI has all these backlogs, but again, my standpoint is like, and we're going to get over into this because I'm just kind of rambling here, but I hope that kind of ties everything together, guys. It's either it's going to be legit or it's not, and so far to me it doesn't seem legit here. Legit means that like you're actually scaling and the chart looks healthy here, but you're seeing almost like a pump and dump here, like almost like every other stock here. So again, when you go to Western Digital, this all looks like, like Pokemon cards. You go to like NFTs here, right? NFTs, once upon a time, like who thought NFTs were, JPEG pictures were a good idea? Like people really thought paying $3 million for a fucking NFT was like a great idea, but look how that turned out, guys. And again, like I'm not trying to make fun of people that bought NFTs. It's just this is how this entire trade feels. I'm not saying that I'm right. I'm telling you how it looks and feels. We keep talking about how the earnings are so great, and I know I can't really say that, but they're not. You would expect a company that's going up like this to actually have even better earnings. So for me, like when you come in line, which means like you basically meet what you say you're gonna do, I'm like, great. Like, I don't know how to feel about you barely winning the race that you said you were going to win. You know what I mean? That's how I view earnings. That's how I view what's happening in the market here. For a stock to go up here, to have lackluster earnings, but people are going to purport them as amazing, forgetting that NVIDIA has different investments, different kind of ways to kind of show money on their balance sheets. But then again, right, if they have so much money like Google and all these other companies, well, first off, why is Google losing money on their free cash flow and guiding down, but spending more, right? Those are just some questions you should ask yourselves, right? So they're spending more, making less. Okay. Does that seem like a good business model? Probably not, okay? Because you want to invest in a company, right? Knowingly that we're losing money, right? If I have a company A over here would you guys just put money in my company if I told you, hey, we're gonna spend more, but we're making less right now? And they don't really have a good answer to, like, you know, why that is, or the answer just right isn't like really up to like what it should be. So again, I think that we're gonna have to make some decisions as traders in the market and investors. Are we gonna believe this trade here? Because to me, right, insanely bullish here, but I mean the justified cost here is asinine. It's very asinine. It's very foolish for us to think, hey, like, this is normal in a chart here. These talks should be up to 1,000 with what they've been saying here. But then you write underneath the hood, you have all these different tickers, subsectors here that are just catching bids here, right? And that's where you lead to Caterpillar, that's where you lead to the chip makers. There's almost money for everyone to be made here. But to me, it's always about which one's going to be a winner here and which one's going to be a loser. Which one do you actually need, and which one can you be like, maybe, you know, I can just let it go. So kind of going over here, and my kind of tinfoil hat read is, the AI trade has become one big circle. NVIDIA invests in OpenAI, XAI, CoreWeave, and Nebius, who then turn around to buy back NVIDIA chips, money in, money out, but it's the same pocket. It's just a churn number. So everyone right now is selling a backlog. It's not delivered demand. Oracle's RPO exploded on Stargate. You know, CoreWeave and Nebius tout, you know, multi-billion-dollar contract clouds. Where's the money, guys? Right? SMCI hypes order books after its own accounting saga. Did we forget that SMCI lied? People got indicted within their own company, think they're CFO, CEO. That's crazy. You know, so, you know, I think the purported demand by them, right, are like, cool, that's signed intentions, like an IOU. So basically, we have to assume that the buyer gets funded, but the one risk is, what if one person can't pay? What if economic things change, right? That's where it ties in kind of to Jackson Hole, which is coming up this week, right? What actually if we, you know, eventually get rate hikes in September? What about then? They're gonna have to raise a whole lot of money. I know I ain't paying for it. So, you know, I think the one risk is if one link can't pay, the whole backlog is just paper. And that's what it is right now. That's what people are saying. Right here, you know, I have AI arguing with me, and I'm like, but it is just paper. They haven't been paid. It's just an invoice. It's a promise. Hey, you know, we're going to do X, Y, and Z, you know, like Oracle, you know, last year. And then they have to put a pause to their data centers for their invoices, right? So, right, NVIDIA is just a load-bearing wall. I think this is why it's super, super important. And I feel like, yeah, I think they're come out on bullshit. I mean, why wouldn't they? You know? And people act like they can't just, you know, fudge the numbers here, but, you know, these companies do it all the time, and they get away with it. You know, NVIDIA does business with SMCI. People forget that. I believe NVIDIA had actually an investment. I have to fact check that. Somebody fact check them in the comment section. An investment probably still here, and maybe they dumped it. I don't know. But they were doing business with SMCI, people that were kind of doing fraud, right? If I were to be doing fraud with somebody else, you'd be like, dude, birds of a feather do what? They flock together. You see how I'm connecting the dots here? So, anyways, right, the August pattern here is, right, it beats every time, but it always sells off here. Maybe this is the one time, right, the one time that they give everybody, and it doesn't sell off, and it just goes parabolic up here to who knows Narnia land, right? So August 2022, they beat, but they warned on gaming. You had the worst reaction. That was also a bear market here too. That's what somebody's going to argue, even though the bear market ended just a few months later. You have August 2023. You had a blowout AI guy. That was the only one that kind of took off here. August 2024, August 2025, sold a print, barely moved here. And some of my tinfoil hat theories is maybe they actually don't do this time, even though they've done it every single time. That's where you usually get people here for all the stat gurus. So I think the stat here, right, is the one-day move since 2022 is a coin cost. Basically up 0.1%, and they have a win rate of 50% here. The 7-day meeting is about negative 3.5% here, and 10 out of 17 reports were read a week later. Then the rip comes about 3 months out here. That kind of seems to be the story here, but what if it's different this time actually, right? And I think why this one's different here is, right, they have front run the entire AI trade, and the market's already priced in AI capex, right? So I think the Jackson Hole, right, is 2 days out or 1 day out later. It's a hawkish Warsh, and I think you have soft data, right? And that would create an air pocket all at once. The whole tape's leadership rests here. So basically, right, if NVIDIA cracks, semis, which are already stuck under the 55 EMA. Let's go over here, just take a look at stocks real quick. Stocks under the 55 EMA here, right? So, right, they have no cover, right? It's look up below. You know, the bigger they are, the harder they fall, okay? And basically right now, also, the bar is no longer beat. It's beat, the whispered beat, and then raise big, 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 and come out with all these crazy claims like paper trades. So I think right now, guidance is the biggest thing here for NVIDIA, going back here to NVIDIA. And then I think one of my takes here is, right, they've hyped it so hard that basically this has to work. Really, there's no soft landing. left in the setup anymore. This print has to correspond with whatever Warsh holds or says, for the entire AI trade to come together, or it's a pin and all eyes, and there's really no margin for errors. So really, if they beat and they raise insane, obviously you're going to see a correspondence here and different tickers here that are related to NVIDIA, including NVIDIA itself here. So you don't have to play NVIDIA. When you play earnings, you pay a high premium and you have a high risk here, right? NVIDIA might say, hey, we're going to do deals with X, Y, and Z company that might come out here. And guess what? The problem with the entire circle, but also good for you as a trader, is they're doing so many different deals with all these different companies here that, even if they don't beat, right, they're going to help these other tickers kind of maybe catch a bid here. And what does catching a bid look like? It looks like this, out of nowhere. So again, right, nobody wants gold, nobody wants gold, nobody wants gold. Then Scott Bessent says we're going to do buybacks. And all of a sudden, right, gold goes back up, which ironically didn't affect what? The US 30-year. In fact, the US 30-year was still climbing here. So, right, it proved that what? They're trying to put a band-aid on a very, very serious problem, but they can't sustain it. Like, you have a big, deep laceration, a band-aid isn't going to cut it. That's what Trump and that's what the entire AI trade is trying to do right now. They're trying to put all these band-aids and all these deep lacerations. You, as a trader, have to make a decision. Who you're going to believe, what are you going to do with your money, how are you going to protect it? Obviously, none of this is financial advice, right? But even with all that being said here, don't make the mistake of saying, you know what, this is bullshit, this is crap, this is fake. I don't care what Warsh says, I don't care what Bessent says, I'm just going to go short here because I believe in that. No, don't fight the market. You take and give what it gives you. We can't force the market to go up. We can't force the market to go down. My goal here is to give you kind of clues and my own kind of twist and spin on things and how Wall Street thinks and how you should react as traders. Hollow Point Trading out. Have a blessed weekend. Take care. Enjoy your family.